My name is Roberto. As Lucas mentioned, I'm from Risk42 Software. We're from Hamburg. And we're going to talk a little bit about consumer credit. So usually I could ask you, the audience, how many installments loans do you have? But that's probably quite a personal question. But in general, it's a huge market. In Europe alone, there are 1 trillion euros of outstanding credit. We're not talking about house credits, we're really talking about consumption credits. The UK is the biggest market, followed by Germany, France, and Italy. The interest rates are usually above 5%, and it's a market that is underwritten mostly by banks. It's a highly secure market, and it's a profitable market for the banks. The key questions for the banks in this market is quite simple. It's about the future repayability of the loans. So is the person borrowing money willing and able to pay back? And they usually use quite old and regulated scoring models for these. These models are based on logistic regression. They have very few data points. They're usually regulated, and they use credit agency scores as one of the key ingredients to be able to assess the risk of the borrower. And that is the biggest challenge in this market, because if you're applying, or if any of us is applying for credit online, more than 50% of these applications are rejected for a simple reason: the bank or the underwriter doesn't know how to score you. So they ask the credit agencies, and the credit agencies nowadays, they're sometimes the last to know if you're really willing and able to pay back. Especially with young people, the rate of information they have from younger people is decreasing. Lots of people are moving within Europe, come from outside Europe. You have people that simply don't have a large credit history that you can assess for risk. So what did we do at Risk42? We were able to analyze more than 700,000 consumer loans. That's a sum of more than 7 billion euros. And we realized that if you use the data from the online application, and if you use customer bank account data and other data that is available online, you can assess the credit risk of a loan in more than 90% of the cases without relying on the credit agency score. So we built a product which is able to do exactly this. It's basically a platform where you can create, deploy, run, and monitor different credit scoring algorithms. These algorithms can be a combination of rule-based mechanisms or of machine learning. Rules can be business rules. It can be important for you for regulatory reasons, or for customer segmenting, that you really want to make sure that you give the person the right product. But you can use machine learning, and these models are quite powerful to assess the risk of every single borrower. The team, we were founded a year ago, but the team spent already 7 years within a successful fraud prevention startup. Everyone who founded the company, 11 people last year, worked already for years within the fraud detection space. So we were able to assess risk from a fraud perspective. Now we're shifting a little bit more to the credit perspective, especially because the credit scoring is, for the banks, much more important than the fraud detection part. Founded a year ago, our investors are Check24 and Lars Hinrichs, Cinco Capital. Check24 is the largest online price comparison site in Europe for consumer loans. So we have a strategic insight in how they build the business and how they assess the business. Customers are from the OPC side, Check24, Facile, others, and retail banks and alternative lenders. That's us. We're currently raising capital, so if you're here as an investor, I'm going to be here till Friday. Look me up, call me, and I'm happy to discuss it a little bit more in detail. Thank you.